Hi, everybody. Good morning. It's a beautiful day here in Greenville, South Carolina, where I live. It's Friday, March 27th. Right now, as we speak, after a big 3-day run in the market up, SPX is 25.52, down 77, relatively tight range today. And VIX is staying very high. A lot of fear going into the weekend. We're still relatively early in the coronavirus situation. Stocks have rallied. And so I'm going to talk about long diagonals today, which are basically covered rights type graph, and you're just substituting the expensive long stock for an in-the-money option. And so the example I'm looking at today will be an Apple. And again, the long portfolio is saying, hey, you know what? Here's a stock, Apple. I like longer term. We've rallied a little bit, quite a bit in the last 3 days. And if we look at a chart here, you can see Apple's rallied a bit with a lot of the stocks the last 3 days. And then it's come back down a little bit today. Today it's down around $8. And so what's a way to get long, right? For maybe your long portfolio, hey, I think the market will continue to maybe work its way back or slowly. But even if it doesn't, take advantage of the high volatility. And so what I'm looking at is buying one of the June 19 200 calls. It's an in-the-money call, and then selling a May 8th at the money 250 call. The very high volatility. And what comes is this is going to get you about 80 deltas long, or equivalent of 80 shares of stock, the in-the-money call. And then I'm selling an at-the-money call against it, which is generally around 50 deltas. So you're going to be between 26 and 30 deltas long. So you can see if this is the underlying right here around 250, and this is the expiration graph. This is how the graph looks today. You can see, and I think this is out about 40 days, you can see all the way up and even neutral. You look really good, and you can make a really good return on your money. Your positive theta decay is working for you, and your negative vega. So as the market, if it does go up and volatilities come down, you do well. But the other thing is you get good protection on the downside because you're selling a at-the-money call, and because the volatilities are so high, you're getting so much premium. Your break even on the spread, even if you don't do any adjustments, is $230, which is $20 lower than we are right now of 250. So it gives you another 8% downside protection, and that's without doing no adjustments on the downside. But the key here is this is a way to get a little bit long deltas if you're not, hey, you know, the market's down 20-25% off its highs as of today, right? And a way to get a little bit long but have good protection on the downside. And let's face it, people who the last 3 days have been buying stock, do they have any protection on the downside? No. All right, here gives you 8-9% protection, and so let's take advantage of the high volatilities. Folks, if you like this type of thinking, and this is what we do here at Sheridan Mentoring, tomorrow, Saturday, which is March 28th, we're going to do our second Saturday webinar in our hedged volatility series. Tomorrow we're going to focus on long diagonals to the upside and the downside, because we're going back and forth here in the market. So, and I'm going to talk about how to hedge these so that even with the chaos going around, you can feel comfortable in how I set these trades up. So these trades are set up for people who are nervous, who are scared, that might want to get a little bit long delta or short, but want to be hedged in case the market makes a crazy move one way or the other, and they don't want to get their face ripped off. So I think this hedged series is really important because it just gives you tools that you can go out in this type of weather with defined risk and much more comfortable. It's like going out in a Chicago winter with an SUV, nice heat, all wheels, all-wheel drive, and you'll be relatively fine. So I want to invite you tomorrow at 11 a.m. Eastern. It'll be recorded Saturday, March 28th. You can get some information on our website. You can get a 20% discount if you get all 4 of these. We go 4 weeks. Tomorrow's the second week. Again, tomorrow will be long diagonals for the upside and downside. You can get short deltas, you can get long deltas. I'm going to show you how to hedge these so that you don't have the worry of, oh, what if this or what if that. So folks, have a great day. We'll see you tomorrow. Thanks.